You've all heard about reinsurance rates rising, and as a result, your insurance premiums are rising as well. I think the more important question is there anything that can be done? I'm hoping my portion of the presentation can help condo association boards navigate this insurance crisis, as well as provide practical and actionable advice on staying insurable, avoiding lawsuits, and doing what's best for your association. So, what can community associations do to remain insurable? Number one is know your loss ratio and keep it down. Your loss ratio is like a health check for your association. Simply put, your loss ratio is the percentage of your claims versus the premium paid during a policy year. A 0% loss ratio means there are no claims for that policy year. So let's say you have a $100,000 premium. To be an ideal risk in the eyes of insurers, your claims should not exceed 30,000. A loss ratio of 30 to 60%, that's average or slightly above average. Most insurance companies may renew your policy. However, if you want to get another quote from another insurance company, you may have a hard time doing so if you cannot show a pattern of regular maintenance and inspections. Now, when your loss ratio is 60% and above, that is really bad because you are losing money for the insurance company. Because your insurance premiums, that also pays for expenses such as filing fees, taxes, overhead, insurance agent commissions, claim handling fees, and attorney fees. Number two, do not defer maintenance on your building. Here's an analogy I like to use. Deferring your building maintenance is like driving your car with a check engine light on. Now, you may be okay for a little while, but you're pretty much gambling. How long is it going to be till you're stuck in the freeway? For your building, how long is it going to be till you have that next big leak? And how many unit owners are you going to displace? Number three, it is recommended that high-risk components inspections to be done on common area elements and inside each and every unit every 3 to 5 years. The aim of these inspections is to evaluate the current condition of the common areas as well as every unit's major components, such as plumbing, electrical, HVAC, major appliances, and smoke detectors. Deficiencies will need to be repaired before they turn into claims. Under 514B, Section 138, the statute states that after notice to all unit owners and an opportunity for owner comment, the board has the authority to require high-risk components inspections. Number four, educate unit owners on loss prevention. Share loss prevention tips on your mailouts, on your newsletters, and even in town hall meetings. Or if you use the app Town Square, share there too. Number five, more importantly, work with your insurance agent. Share with them what proactive measures your association has taken to prevent building losses. Have you hydrojetted the pipes? Have you repiped the whole building? Or have you installed water leak sensors inside every unit? This will help in presenting you to the best light possible to the insurance companies. Insurance underwriters are conservative by nature because they are the gatekeepers of the insurance company profitability. The more information you arm your insurance agent with how profitable your association has been for the insurance company over the years, then that's one way to keep your premium increases reasonable. When your association gets non-renewed and we have to find a new insurance company for your association, that can help alleviate an underwriter's concern and go from being unsure or on the fence to actually giving you a quote. Number six, one of the lessons learned after the Maui wildfires is that a lot of the buildings were underinsured. In a hard market, the insurance companies are being more conservative. A new focus has been placed on underwriting guidelines to make sure buildings are insured to value. And insuring to value is a fundamental principle in insurance. It protects consumers so that your policy can adequately protect you and your financial investment. The primary role of insurance is to be that safety net to help condo associations and homeowners rebuild after a loss or a natural disaster. It is advisable for condominium associations to obtain a building replacement appraisal every 3 to 5 years from a certified appraiser. Having your association appraised for replacement cost and obtaining full replacement cost coverage is also in compliance with Statute 514B 143, which requires condo associations to purchase and at all times maintain full insurable replacement cost. It's also in alignment with the requirements from mortgage companies and Fannie Mae and Freddie Mac. So, what are the dangers of partial insurance coverage? It is estimated about 400 associations here in our state have partial coverage. Due to the increasing cost of insurance, some associations have intentionally decided to purchase partial coverage. What are the dangers in doing so? Well, you have noncompliance with the statute 514B 143. You also have possible noncompliance with your association's declarations and bylaws. And then partial coverage is also not in compliance with Fannie Mae and Freddie Mac. So let's take a look at Fannie Mae requirements. They require named storms, also known as hurricane, coverage to be at full replacement cost along with a list of other perils. Furthermore, it requires that if the condo association has a policy that excludes or limits coverage on any of the required perils, the condo association must obtain an acceptable standalone policy to cover the excluded or limited peril. Compliance with mortgage requirements matter because this affects your unit owners. Most associations have unit owners that have loans or home equity line of credits, and most associations also have some unit owners that have to sell their units. And they're going to run into problems selling to non-cash buyers if you don't have full coverage. So with those associations in our state that are underinsured, have you ever wondered what's going to happen if they get sued? In a judicial system where anyone that has a right to sue can, it's not too far-fetched to have some unit owners who are unable to finance, refinance, get a HELOC, or sell their units. It's not too far-fetched for those unit owners to become enraged enough to sue their own association or board. We are seeing this in Maui, unfortunately, where unit owners are suing because they don't have enough coverage to rebuild after the wildfires. But did you know that your directors and officers liability policy, your D&O policy, may not cover the board or your association for failure or inability to effect and maintain adequate insurance coverage? To these associations who only have partial coverage, if their D&O policy contained this exclusion, I hope that they have enough funds to cover any legal fees or claim settlements because their D&O policy may not cover them. So another common question I hear nowadays is, how does the insurance marketplace work and who are the different players? Let's start with the reinsurers. These are companies that provide insurance for insurance companies. Reinsurance is a way for insurance companies to obtain catastrophe protection and transfer some of the financial risks that they assume when they are insuring condo associations, homes, and autos. Reinsurance expands the insurance company's scope. Reinsurers are also global in scope, and some of the most well-known names in reinsurance are Munich Re, Swiss Re, and Lloyd's of London. Next, we have the insurance companies. Admitted or standard insurers are licensed and under the supervision of the Hawaii Insurance Division, who examines the fiscal conditions of these insurance companies. Currently, here in Hawaii, you've heard Sue say that we only have 3 major carriers that are writing condo associations. There's a 4th one, State Farm Insurance. However, they're not writing any new business, and they're only renewing policies that are grandfathered in. In the excess and surplus market, or the E&S market, these are the insurers of last resort. They are a specialty market that insures difficult or high-risk exposures that standard carriers won't write. Their premiums are way higher compared to the standard admitted carriers, and E&S carriers also do not have to file rates with the Hawaii Insurance Division, and they're also not backed by the Hawaii Guarantee Fund. In this hard insurance market, if you're not with one of those 4 standard carriers, you probably have an E&S policy, which is made up of layers. Your lead layers are the companies that are assuming the most risk because they are the first dollar out to pay in the event of a claim after the deductible threshold has been met. So you'll see it's most common to see the lead layers, they're only giving $5 or $10 million in coverage because they're limiting their exposure. And the higher you go up in the layers, the easier and less expensive it is to get bigger chunks of coverage. Next, on the supply chain, we have the insurance agencies, also known as the retail brokers. To write insurance policies, insurance agencies need to be appointed with an insurance company. The appointment process makes the insurance agency an official retailer of the insurance products for the insurance company. Some of the insurance agencies here in Hawaii that you've probably heard of that specialize in condo associations would be Atlas Insurance, Insurance Associates, and ACW. Now, several insurance agencies from the mainland are also entering the Hawaii market. And some of the names that you may have heard are Alliant Insurance Services, as well as Morgan Stanley Insurance Services. And then we have the insurance agents or producers that are individuals employed with the insurance agencies. And lastly, the bidding process. So when managing a condo associations, it is common for associations to go out and bid services like plumbing and painting. In these cases, you gather multiple quotes because these companies set their own prices. And their services are typically large projects that you don't do every year. It's only every few years. Insurance, however, operates differently. And here's why. Renewing your insurance policies is already a major time constraint. The process starts months before your renewal, when your agent is gathering information from your property manager and your site manager. The better strategy would be to find an agent that has access to all the markets and have them do the shopping around for you. Have them compare the coverages as well as the limitations or exclusions of the policy. Number 2, work with an insurance professional that is familiar with the nuances of the condo industry, as well as someone well-versed in 514B and how it applies to insurance and claims. Number 3, unlike painting and plumbing companies, insurance agencies do not set their own rates. We submit an application to the insurance company, who in turn gives us quotes. And an insurance company will only release one quote to the first agent who sent the application. Diminished insurance company relationship is a 4th concern. Repeatedly asking for quotes year after year can result in insurance underwriter fatigue. And the reason why is that it actually takes hours to review an application and to quote your policy. And number 5, focus on value and service. In my 18 years in the insurance industry, sometimes I see clients reach for the key to the wrong lock. What I mean by this, there are some associations who do not get to the core of what is really driving their insurance premiums. Some insurance companies will increase deductibles year after year. They'll do this when they see a frequency of losses or claims. However, what is the association doing to prevent these claims? In a time where insurance premiums are rising, associations will need to focus and make decisions not only on price, but also in finding the right coverage, because you don't want to be in a situation where there's a coverage gap and it's too late and you bought that policy just because of price. Focus on value and service. Choose an agent who will stand as your partner, an advocate, and who will take the time to properly guide your association. And lastly, in this economy, as an insurance agent, you need to have tough skin. I've been to a lot of board meetings, and boy, I'm not the favorite person at that time. Some even start looking at me like I'm that green wicked witch. So what I do hope is that when I go to your board meeting, I hope you see me as your biggest supporter and advocate in ensuring that you have the best possible coverage and the proper guidance. Help me help you, because we're all in this together. Thank you very much.